Something big is happening right now, and if you're not paying attention, you might miss one of the most important windows to protect your wealth in years. Silver just pulled back hard. Gold is sitting at levels nobody dreamed of a decade ago. Platinum quietly doubled while nobody was watching, and military carrier groups are moving toward Iran as we speak. This is not a drill. In the next few minutes, we're going to break down exactly what's happening in the precious metals market right now, why silver could be the single best buying opportunity of 2026, why platinum might be the sleeper metal that shocks everyone, what geopolitical tension means for gold and silver prices, why constitutional silver is flying off shelves, and what a Russian grandfather's war survival story teaches us about real wealth. This video could genuinely change how you think about your money, so stay locked in from start to finish because every single minute matters. Before we dive deep, if you're new here, welcome to Khan Invests. This channel is built for people who want to think smarter about money, metals, and their financial future. If this content helps you even a little bit, please hit that like button right now. It takes 2 seconds and it helps this channel reach more people who need this information. Hit subscribe so you never miss a video. And if you really want to support the mission here at Khan Invests, share this video with someone you care about. Now let's get into it. Right now at coin shops across the country, something interesting is happening. Mercury dimes are flying off the shelves. Constitutional silver, the old pre-1965 US coins made of real silver, is moving so fast that some dealers are almost running out of quarters. And the people buying are not just experienced stackers. Regular people are walking in, lining up before the doors even open, looking for a way to protect what they have worked so hard to build. So why is this happening? Because silver just pulled back from over $120 an ounce. And for a lot of people, this feels like a second chance. Think about it. Not long ago, silver stackers were dreaming about the day silver would hit $50 an ounce. That was the big milestone everyone talked about for years. Now, silver has been above $76 an ounce after touching $120, and people are treating the pullback like a gift because that is exactly what it is. The fundamentals have not changed. Nothing about silver's value, its uses, or its importance in the global economy has weakened. What changed is the price tag. And when a powerful asset goes on sale without any real reason for the underlying value to drop, smart people pay attention. Silver at $76 an ounce when it was recently over $120 is not a warning sign. It is an invitation. Now let's talk about what makes silver such a unique metal. Compared to gold, platinum, palladium, and other precious metals, silver is still remarkably affordable. Gold is sitting near $4,987 an ounce. Platinum is around $2,447. Palladium is at $1,761. And silver, still under $100 an ounce. Yet silver is one of the most used industrial metals on the planet. It is the most electrically conductive metal that exists. It is used in electronics, solar panels, medical equipment, defense systems, missiles, and weapons. And now it is being used in AI data centers at a scale nobody could have predicted even 10 years ago. The rise of artificial intelligence is creating massive new demand for silver. Data centers are being built at a record pace around the world. New battery technologies are coming online. Electrification of transportation is accelerating. Every single one of these trends requires silver, and the supply of silver is not growing fast enough to keep up. So when you combine rising industrial demand with investment demand during times of global uncertainty, you have a very powerful setup for silver to move higher. Dealers on the ground are already seeing the demand shift. On busy days, coin shops are filled with both buyers and sellers. When the price ticks up even slightly, sellers flood in hoping to take profits. But on quieter days, buyers are still coming in steadily, picking up constitutional silver, mercury dimes, and silver rounds at prices that still feel like a discount compared to recent highs. The market is building what traders call a base, a new floor, a foundation from which the next big move higher can launch. Now let's talk about platinum, because this is the metal that most people are completely ignoring, and that might be the biggest mistake they are making. A little over a year ago, platinum was trading below $1,000 an ounce. Today, it's over $2,000. It quietly doubled while most investors were focused on gold and silver. No big headlines, no massive hype. It just moved, steadily, consistently, almost invisibly. Historically, platinum was actually more valuable than gold for long stretches of time. That is why the platinum credit card outranks the gold card. That is a cultural memory of a time when platinum truly was the king of metals. And right now, platinum is trading at less than half the price of gold, for a metal that is 32 times rarer than gold. That is a gap that is hard to explain logically. It may not close overnight, but the direction it is moving is hard to ignore. The challenge with platinum for most investors is that it's not as easy to stack. Most coin shops do not carry it. You have to order it. And because it looks visually similar to silver, it doesn't have the same emotional appeal when you're holding it in your hand. But from a pure numbers perspective, from a rarity and value standpoint, platinum has a strong case as a long-term hold. If you had to pick which metal will perform best in 2026, the honest answer depends on what you're measuring. Silver has the most raw potential for dramatic price movement because of its low price point and massive demand. It can move fast and create real excitement. Platinum may produce the best percentage gains quietly, the way it has been doing all along. And gold remains the anchor, the foundation, the metal that has preserved wealth across thousands of years of human history. Speaking of gold, the predictions coming from analysts and serious market watchers are striking. Some forecasts are pointing to gold reaching 5,400, 5,600, even $6,000 an ounce in the not-too-distant future. If gold reaches $6,000, what happens to silver? Based on historical ratios, silver could be pulled back toward $100 an ounce or even $150. And that kind of move could happen quickly, not over years, potentially within weeks or even days under the right conditions. What conditions? That brings us to the part of this conversation that everyone needs to understand: geopolitics. Right now, US and Iran tensions are escalating. Talks are happening, but they're not going well. The reason they can't go well is because trust simply does not exist between these two parties. And while diplomatic conversations are taking place, military carrier groups are being moved into position in the waters near Iran. You don't deploy that kind of military power just to make a point. When that level of military hardware starts moving, it's a message, and markets hear that message loud and clear. Precious metals thrive on uncertainty, they thrive on fear, and they absolutely thrive on conflict. Every major geopolitical crisis in modern history has driven gold and silver prices sharply higher, at least in the short term. The evacuation orders for U.S. citizens in the region, the movement of military assets, the breakdown in negotiations. All of these are signals that something significant may be approaching, and when it does, the metals market will respond the way it always has. This is not doom and gloom thinking. This is historical pattern recognition. A woman recently walked into a coin shop and shared a story about her grandfather. He was from Russia. He had lived through multiple wars, and his advice, passed down through decades, was simple: hold gold, because every time there was a major war, every time it became hard to get food or basic necessities, gold was what saved his life. Not paper money, not promises. Gold. The same story played out in Venezuela when the economy collapsed and the currency became worthless. People who held gold were able to survive and even thrive. The people who had nothing but paper currency suffered enormously. This is not an abstract concept. This is recent history. And it's a reminder that precious metals are not just an investment. They're a form of insurance, a hedge against the kinds of events that most people hope will never happen, but which history shows us happen again and again. There's even a concept in the stacking community called helicopter money. The idea is simple. Imagine a worst-case scenario. The last helicopter is leaving. You need to get on it. What do you have to offer? Paper dollars might work, silver might get you a seat, but a gold coin or a gold watch? That changes the conversation entirely. It's not about being dramatic, it's about understanding that gold and silver carry universal value that transcend any single government, currency, or economic system. The smartest approach is to hold both gold and silver for the long term, not to trade them constantly, not to panic when prices dip, but to build a position steadily over time, protect it, and eventually pass it on to the next generation. Teaching younger people about the importance of precious metals is one of the most valuable financial lessons anyone can share. A diversified investment portfolio that includes metals is simply a more resilient portfolio. It doesn't have to be all about disaster. Even in peaceful, stable times, gold and silver have proven to be solid, long-term stores of value. The current moment in the precious metals market is genuinely exciting. Silver is consolidating at levels that would have seemed impossibly high just a few years ago. Platinum is quietly making moves that deserve more attention. Gold is building momentum toward price targets that once seemed unrealistic. And the world around us is creating exactly the kind of uncertainty that has always pushed investors toward real, tangible assets with centuries of proven value. The window is open. The question is whether you are going to walk through it.